Good morning, folks, and welcome to Stock Charts today. Let's begin with the headlines off of Zero Hedge, which caught my attention. We have Japan expects to hit 2% inflation in 5 years. You read a headline like this, and you have to understand that Japan has been in a deflationary cycle since the late 1980s. And in 5 years, their economists predict that they're going to hit 2% inflation. It's maddening. You know, what's the very definition of insanity? It's doing the same thing over and over again and expecting a different outcome. These guys have lost their collective minds. Take a look at their plan. Negative sales tax, 1% tax per month on government bonds, national tax-free lottery. 4, have a kid. You can't make this stuff up. The next article up, shorts crushed in biggest dollar squeeze since the U.S. elections. No doubt about it, there is a massive bloodbath going on in the currency markets as these shorts get squeezed out of their positions. It's an overcrowded trade to the short side, and they are being taken to the woodshed. We're going to go over the chart of the dollar in a moment. And the last chart up, Gunlatch, buy oil, short Facebook. Jeff Gunlatch is a trader who I follow. Smart guy. He's of the mind, and we're in the same camp here, he's of the mind that the rally in commodities is a signal of a late stage economic cycle. Now, Gunlatch notes here that he believes that commodity inflation is common before recessions, i.e. late cycle. Agreed. But what he also believes, and I believe it as well, is that regulation of technology, which happens to be the least regulated sector, could kill this bull market. And that's why he's saying to short Facebook, amongst other reasons. Let's get to the charts. We'll go over Facebook and the dollar in a moment. Let's get to the major indexes first. All right, as we like to do, we're going to go over the pre-market activity with 4-hour charts. Then we'll segue over to member stock chart request, which is where we review the symbols that our members submit for me to review on video. Let's kick things off with the US dollar. On Market Wrap last night, I mentioned to members, watch out for this 4-hour chart of the S&P 500 because it's putting in a cup, I should say possible cup with handle formation, and we are flirting with a breakout. Our pivot point is here, the highs of April the 18th. Taking a look at the NASDAQ 100, they managed to recapture a support level given up here on the 20th. So we are higher this morning by about a 0.5 percentage point. Let's go to a chart of the Dow. The Dow futures, very much like the S&P 500 with a cup handle formation. Just because we have this formation doesn't necessarily mean that we are going to break out. It could be a head fake. You want to wait for the event. Members, we spoke about the event last night, which is a clearing of the pivot point. If you haven't checked out that video, please go do so. It's Market Wrap. It's posted on the website right now. Now, yesterday, the 10-year bond yield rallied to multi-year highs. This morning, bonds themselves, the prices are rallying a bit, but they appear to be rolling over some. So the question you need to ask yourself is that if we clear 3% on the 10-year yield, and the market has already showed that it could buckle with a yield that had a prior high in 2018 of 2.94, what's it going to do in the face of a 3% yield? So just be forewarned, there are troubles on the horizon. Taking a look at the US dollar, the dollar broke out above key resistance yesterday. It is holding it. Yes, we have some topping action, but until we break the support level, the path of least resistance remains to the upside for the dollar this morning. RSI is overbought, but could stay overbought. We are very close to the 91 level. I would not want to see a close above 91 on the Dixie this week. Gold. As I mentioned to members last night, call me a conspiracy theorist, but we were very close last week to breaking out and in fact hit multi-year highs on gold. And then out of the blue, the dollar begins to rally, and it just so happened that conditions were right with it being a crowded trade to the short side. And so a short squeeze of the dollar served two purposes. One, speculators in the currency market made a ton of money squeezing the shorts. And two, it took commodities off their highs and out of the headlines, which is exactly where the government does not want gold to be. Gold is a competitor to the US dollar, and if gold is breaking out to multi-year highs, it's a signal that there's something very wrong with this economy. So gold this morning is up. It appears as though it's a dead cat bounce. I don't think this sell-off is over yet. Members, more to come. Bitcoin, an incredible rally since last week. We cleared not just one resistance level, but two, and it appears as though we are heading up to 94.90 on Bitcoin. You're going to find a lot of resistance up there. RSI is very overbought, well above 80, so just be forewarned. That doesn't mean it can't go higher. It just means that there's a caution flag on the track, and if you have profits, think about booking some of those profits and making them real fairly soon. Let's get to member stock chart request. Again, folks, this is where we go over the symbols that our members submit for me to review. First chart up, DATA Tableau software weekly chart. A nice W formation. We had a pivot point at 62.53. We cleared that pivot point. It's been off to the races. We peaked out recently at 87.60, pulled back, respected the lower band of support. Now we appear poised to challenge 87.60 yet again. I would not be a buyer of these shares until we closed above that resistance level because you have a lot of overhead supply back here. Buyers who bought back here, they want their money back. Stokes are rising, RSI rising. So the weekly chart, we're starting off the week good, but no new weekly high yet. And last week we formed a topping tail. That's a sign that you already have some sellers moving in and selling strength. Daily chart. Now on a daily basis, we are flirting with a resistance level. We are in a wide trading range. So I would not be a buyer until we closed above, at a bare minimum, on a daily basis, very short-term basis, 86.04. Ideally, though, 87.60. Stokes appear poised to hook up, as is the RSI. Volume yesterday, above average, good stuff. Energy. We have a classic pennant formation. This is a continuation breakout formation. A bullish key reversal yesterday. It appears as though that energy will move higher. This is a momentum trade. You could buy the breakout once it clears 36.19. Volume yesterday was low. Now, the oil did very well yesterday, and you need oil to rally for the rally in energy stocks to continue as well. Now, keep in mind that the dollar has been rallying. Oil shrugged it off yesterday. The question is, can that continue? So ERX is a buy once it clears 36.19. Keep in mind you have a lot of overhead supply back here. Apple, weekly chart. This is not a stock that's looking healthy. RSI has broken down below the lower band of support. Stokes are rolling over. They're still above 50. So I wouldn't go shorting Apple. Price is still holding on to the lower band of support. So in short, folks, we're putting in lower highs on Apple. No lower lows yet, but we are very, very close. So at best, Apple is a watch. It's a sideways consolidator. Earnings are coming out. Let's see what those earnings bring, but I wouldn't buy it and I wouldn't short it. Lower highs and lower lows and ultimate oscillator. The weekly chart is not looking good. Daily chart, we had broken out of this triangle formation here on April the 5th, pulled back, retested, rallied, and it appears as though we are pulling back to retest support yet again. And in fact, yesterday, we undercut the lows of April the 2nd. So not looking good here. Buyers did step in to bid it off of its 200-day moving average. volume to the downside is not good. We're seeing institutional distribution. So I would avoid these shares. MDU Resources, weekly chart. We broke out here the week of March the 26th. We've been consolidating. We're pulling back, retesting the breakout point. Yesterday, we flashed a bullish key reversal. We may be long of MDU fairly soon. I don't like the fact that Stokes are trading down below the 50 level. I would want them to begin to flatten out and hook back up. Volume yesterday was very light. So MDU remains a watch for now. We're very close to a buy signal though. UGAZ, this is the Nat Gas leveraged ETF. Weekly chart. Believe it or not, we broke out the week of April the 9th. And we have just been trading sideways ever since. That breakout came on decent volume. Last week, though, we saw some pressure to the downside. We retested the breakout point. I wouldn't be a buyer until we cleared last week's highs, and that high was at $60.65. So what we're doing is that we're putting in higher lows, but we do not have higher highs yet. So while I believe that you can nibble here, I would keep a tight stop on this position because despite the fact that we're seeing some bullish action, we've been here before. The path of least resistance is clearly to the downside. That downtrend is unchanged. Daily chart. Now on a daily basis, we're in a tight consolidation. Stokes are rising and they appear to be hooking up. RSI threatening a breakout to new higher highs. I would be a buyer of the shares on a rally and a close above $60.65. Then I would add more on a rally and a close above $64.41. Why there? It's because that would signify the fact that we have not only had higher lows, but we now have higher highs. And it could mark the end of a bear market in nat gas. But that's a bold statement, right? So we want to respect the long-term downtrend. And again, we've been here before. So let's respect these resistance levels. And if you do so, you'll make money. If you ignore these resistance levels and don't buy on a clearing of them, and you buy prior, you run the risk of getting run over, as many bulls have in the past, by trying to call a bottom in natural gas. So just be careful here. Facebook. We broke down on Facebook back here on March the 19th. This is a weekly chart. We have a dead cat bounce off of an oversold condition relative to the 3 standard deviation Bollinger Band in red. So far this week, we are down after putting in a topping tail on top of this candlestick the week prior to last. Last week, a doji star formation, a sign of indecision. Not good. We have earnings that are coming out. So I wouldn't short in advance of earnings, but clearly the path of least resistance has changed from up with higher highs and higher lows to down with lower highs and now lower lows. So trade the trend. All these indicators look absolutely horrible for Facebook daily chart. Now, on a daily basis, it's clear we have lower highs and lower lows, which is consistent with the weekly chart. We broke out of a downtrend here on April the 17th. The question then becomes, can we break out above 169, or do we fail and continue this downtrend? So I wouldn't short Facebook quite yet. Two things need to happen. One, I need to have earnings out of the way before I short Facebook. Two, I need to see a breakdown on price. So members, more to come on Facebook. To buy it, I would need to see the shares rally up and through 169, and ideally, earnings need to be in the rearview mirror. And that's it for this morning, folks. Everybody have a profitable trading day. Members, I will talk to you this evening. Be well.